This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, November 5th, 2014. Euro dollar. So the euro remains under pressure after stalling out on the corrective recovery this week on Tuesday at 125.80. A break back above 125.80 would be required to keep the correction intact and open the door for a more significant upside. However, ultimately, any gains should be limited to the 50-day moving average, which comes in around the 127.50 area. In the short term, while the market remains below 125.80 on a close basis, the focus is on a retest of this week's 124.40 yearly low with a break below 124.40 to open the door for the next major downside extension towards critical multi-month support around 120. Sterling dollar. Cable has been locked in a consolidation over the past several days, but the consolidation has been classified as a bearish consolidation given the intense move to the downside that had preceded the consolidation. A break below 158.75, which is the current range low and yearly low from the 15th of October, would open the door for the next downside extension towards 155. Inability to take out 158.75 would keep the consolidation intact, but only a break back above 162.27, the high from the 9th of October, would give reason for a shift in the structure and take the pressure off the downside. Dollar yen. Dollar yen continues its surge since breaking above the previous yearly high at 110.10, with sights set firmly on 115, which is the measured move objective off of this latest move. The break above 110.10 opened that 5 big figure move following the pullback that we had seen of about 5 big figures down to 105.20 on the 15th of October. So the measured move objective should be met at 115 over the coming sessions, and we're basically there. At which point, with technical studies being overbought, we could see a bit of consolidation and a bit more of a pullback before we see a resumption of gains. Ultimately, at this point, any setbacks in dollar yen should be limited to this previous resistance, this previous yearly high at 110.10, now turned support. Euro Swiss. Euro Swiss is getting interesting with the market finally taking out key support from September, the yearly low, the previous yearly low at 120.45, to break down to 120.33 thus far on Wednesday. The break below 120.45 exposes critical support at 120, and we all know the significance of this level. And it'll be interesting to see if this level is tested over the coming sessions. For now, a push back above 120.80 would be required at a minimum. That's the high from the 15th of October to alleviate immediate downside pressure. Aussie dollar. Aussie dollar remains confined to a bearish consolidation over the past several days and weeks, with the top side being defined at 89.11, the high from the 29th of October, and the downside coming in by the yearly low from the 3rd of October at 86.42. However, the market is expected to break down below 86.42 given the bearish consolidation, and a break and close below this level would open the door for the next major downside extension towards the 84 area. Dollar CAD. Dollar CAD continues with its surge to fresh yearly highs since breaking above the previous high from the 15th of October at 13.86. A fresh higher low has now been confirmed at 11.21. That's the low from the 29th of October, and the market is now focused on a test of 115 over the coming sessions. Ultimately, only back below 11.21 would take the immediate pressure off the top side. Kiwi dollar. Kiwi dollar remains locked in a multi-day, multi-week consolidation with the range resistance defined at 80.35, the high from the 21st of October, while support now comes in at 76.98, the 3rd of November low. A break and close below 76.98 would confirm a bearish consolidation and open the next major downside extension towards 74. Ultimately, only back above 80.35, however, would take the immediate pressure off the downside. SPX 500. The SPX 500 continues to soar to fresh record highs, with the market having an intense correction in October off of the lows, and now in the process of looking to fresh, uncharted waters towards the 120.50 area potentially. Some bearish price action on Tuesday has stalled out the gains after record highs on Monday, but the market will need to break back below 2002 to officially alleviate immediate short-term topside pressure and open the door for a bit more of a correction. Inability keeps the focus on the top side. Gold. Gold remains a big story in the market since breaking down earlier on the 31st of October below critical support at 1180. The break has now opened deeper setbacks to fresh multi-year lows towards 1143 thus far, and the market could be headed down towards 1100, with people also talking about, market participants also talking about critical psychological support at 1000. However, daily studies are highly oversold, so there is risk for a bit of a bounce before we see any resumption of declines. Ultimately, this market would need to see a break back above 1256, 1256 is the high that we had seen on the 21st of October to officially alleviate immediate downside pressure. That's all for today. Have a good one.